Hi traders, it's Roberto, and this is another tutorial for our members, and we're going to be going over three different strategies. Some of these strategies actually overlap. One is called color change strategy, the other is price action strategy, and what I like to call exceed daily range strategy. I use the Stochastics indicator for these strategies, a 14, 3, and 3. For the color change strategy, I use the entry is 8 pips below or above the previous candle close. We're looking for about anywhere from 20 to 200 pip profit. Ideal times beginning or the end of the session, like London Open, London Close, New York Open, New York Close, Australian Open, and also the Asian market open and close. So let's go over some trading strategies. We're looking at the pound Aussie dollar. And this is actually the beginning of a new session here. And we've got stochastics indicator, oversold, so we qualify this trade. We're using the color change candle strategy on this trade setup. This is a 1 hour chart. And we notice we have 1, 2, 3, 4, 5, 6 red candles followed by a color change candle. The next thing I do is I draw a horizontal line at the body of the close of this candle. So this is the close of this red candle. I'm sorry, the bullish candle, the green candle. My entry is 8 pips above the close of this candle. So if it closes at 169.28, my entry is 169.36. So that would be about here. And there's your trade. The market, I probably would have exited at the previous resistance level, which was here. That would have given me about 56 pips. But of course, this took off and continued the whole day and exceeded its daily range. And now we have another trade set up at the London close. Again, qualify the trade. We've got stochastics indicator overbought. Okay, this is a 14, 3, and 3 indicator. We have a color change candle, but we also have what is called the false break price action technique. Remember, you need to draw a horizontal line at the body of the candle. We notice there's resistance. The next candle closed at the same price. And then this candle, hours later, this is about 3 hours after the London close, we have a false break candle. Now, I could have taken this trade based on the color change candle, but I would have been stopped out 3 hours later because price retested the highs. And actually, I'm sorry, I would not have been stopped out. I take that back because my stop loss would have been 20 pips above this candle. So you could have taken the trade here, 8 pips below, but you would have to wait 3 or 4 hours after the swing highs were retested. Your stop loss is up here, so you haven't been taken out yet. So the market retested the highs and came back down below and closed below the resistance level. And on this strategy, you would have taken a trade on this candle, and eventually the market turned around and went south. Now, why did it take so long for this trade to take off in the direction that you wanted to? It's because we were in the middle of sessions. This is the London close, and we did not have volume till the Asian session. Okay, so you've got to keep that in mind, that when you see trade setups, when you see nice trade setup like this, that it may not happen immediately. You would have to wait several hours before the trade actually takes a direction. Okay, so again, count the number of pips. Swing low to swing high, 238 pips, exceeded its daily range. Color change candle strategy, take the trade. Your stop loss is above the swing high, 20 pips above the swing high. Or if you didn't capture this trade or you wanted to wait till much later, notice that we have draw your horizontal line on the body, because if a body of a candle closes above this level, then the market would continue to go up. It didn't do that. we had market try to penetrate the resistance level and the body closed below this horizontal line, and you would automatically take a trade, sell on the next candle. Just make sure the stochastics indicator is still overbought, and there's your trade. Let's look at some more trade setups. Here again, same pair, pound Australian dollar. How do we qualify a trade? Remember, number one, stochastics indicator needs to be oversold or overbought. In this case, it's oversold. We have 1, 2, 3 red candles followed by a color change candle. And I would draw my horizontal line on the close of this candle, which is 168.37. My entry is 8 pips above 168.37, which is 168.45, and that would be around here. That's my entry, and then I would target the most recent swing high, which was here, and notice that the market did reach that level, so that would have been 168.45 all the way up to 169. It's about a 55 pip run. Then what do we see? This is a color change candle strategy, but false break. So I would definitely be trading this based on the false break, this exhaustion candle, and not the color change candle. Stochastics is overbought. Qualify the trade again. Count the number of pips from the swing low to the swing high. Went up 145 pips, which is enough. We have a false break. Notice that the market had been in a downtrend prior to this retracement. So market has memory. Just remember that we're in a downtrend, and these were counter trend trades. And this trade that we just took is in the direction of the prevailing trend. So I would have taken this trade. Remember again, price action technique. You draw your horizontal line at the body of the candle, and notice that this candle closed, the body closed inside the resistance, so you would automatically sell on the next candle, and price went all the way down to the support level, and that was about 70 pips. Okay. Here's another great trade setup. Same pair, pound Australian dollar. Again, we need to qualify the trade. So we've got stochastics overbought. We have a color change candle. I count the number of pips from the swing low to the swing high. Exceeded its daily range because that was, I'm sorry, let me just take, this is the start of the day. This was the previous day. So the market put in 284 pips, definitely exceeded its daily range. So there are several patterns here. We have a color change candle. So if you use this strategy, your entry would have been 8 pips below the close of this candle. It closed at 168.93, so your entry would have been 168.85. So about here, and the market went all the way down to 167.94. That's a huge run. Okay, and again, stochastics is overbought, color change candle. We also have an evening star in the 1 hour chart, and that in itself, that pattern is a reversal pattern. So on a 1 hour chart, we're not looking for 400 or 500 pips. We're looking maybe for 100 pips when we see these patterns, and the market put in about 150 pips. When you see these patterns on a daily chart, you're looking about 4,000 or 5,000 pips. On a 4 hour chart, maybe 200 to 300 pips. On a 1 hour chart, about 100 to 150 pips. And that's exactly what it put in. Here's another trade setup where we have, again, we're qualifying this trade. So stochastics is oversold. And what do we see here? We draw a line at a support level. Okay? It has to be the body, very important. Then 3 hours later, this candle tried to penetrate the support and failed. And this makes this a false break, and you automatically would buy on the next candle. And for about 6 hours, the market just went up and just kept going up. Okay. Again, we have a support level, these two candles, price just bouncing off the support level, and you draw your horizontal line at the body. We also had a color change candle. Now, if you would have taken this trade based on the color change candle, you would have been stopped out. Okay. I'm not sure if the market went down first and then shut up, but I presumed this was a news event. So if it was a news event, I would have not traded it until this candle finished. But let's see if you actually would have been stopped out. See how many pips that would have been. And yes, that was 30 pips on this candle trade right here. But if there was a news event, I would have definitely gotten out of this trade before the news event, and not taken this color change candle trade at all. But based on this candle alone, you would have entered this trade here, and there's your profit, 165.69, 166.93. So that's over 100 pips on this trade. Okay. So that concludes this tutorial. The next thing we're going to be talking about is breakout trade setups, divergent setups, and a few other trading strategies add to our arsenal. So have a good weekend, and see everyone on Sunday night for the Sunday opening.